That was a very interesting panel with people from debt or from investment. We had the opportunity to shut out with two American investors. What I keep in mind is that the strategy of all these investors are very diversified. That we might see lights at the end of the tunnel and the turmoil we have been in for several years now. But it was very interesting to share with them their view on real estate versus other asset classes, the view of their own company regarding this, and the conclusion was that there will be always room and part of investment that will be made in real estate. We discussed after that the position of Europe versus the other market, and especially the position of France among Europe. What is very interesting is that the strategy of these investors are very different side, and they all share also the fact that deals are making longer to be done and to be concluded. But nevertheless, there are pockets of growth that are attracting foreign investors. Right now, if we look at the figures, we have the lowest first quarter since 2009, with only 1.7 billion invested. But we had yesterday a very interesting first session with the chief research officer of Swiss Life with GRI. That was quite optimistic, and it's true that. We real estate professionals are waiting for the decrease of the rates to really start to be an asset class that is reconsidered by investors and to have a rebound on our markets. What I keep in mind, nevertheless, is that there's a growth expectation in finding new relay of growth within real estate over the last 10 years. The growth has been really driven by the compression of the cap rate. That won't be the case anymore. And personally, as a manager of an asset management company, we see that we are more and more asked to intervene and to work on asset classes by investors that maybe were not considering that we were necessary in their real estate process. And right now, we have to find some new leverage to create value in real estate through a very accurate asset management. No, right now, and that's what we've seen in the panel, we have some people that are investing in some very small pocket of growth with very small deals. That's interesting to note that in France, in the first quarter, we had no real estate deals about 100 million euro. All the investors are really focusing on very small deals. And we have others that are very attentist and that are not willing to invest for the moment. What I see with my own investors and clients is that even if they are not ready to buy, there's a new interest and they ask me to educate on the French market once again, and to provide them with proof that the French market has something different that could be interesting for them as foreign investors. I will just give you an example. Some of them are really astonished when I say that the vacancy rate of the Paris CBD is only between 3 and 4%, whereas in the US, for example, if you take Manhattan, it's maybe 25 or 28%. As I mentioned, there's a high demand on asset management, whether it's by investors or it's by banks that are recovering the keys of some assets and are not occupied to that. So on a personal point of view, I think that the next 2 or 3 years will be very busy and very exciting for asset managers. On an investment and real estate professional point of view, I see my colleagues lights at the end of the tunnel. I hope that we won't have any geopolitical issue that will really break the recovery that I see ahead.